Let's talk about unrealistic ROIs in the turnkey world. Okay, so a lot of investors today that we come across our phone calls and they're talking about crazy ROI numbers that they see online. Honestly, that mindset can get you in trouble kind of fast, especially in the turnkey space. When you're advertising 25, 30, 40% returns on rentals, there's usually something that is going to be coming along with that rental. There's a story behind it, right? Like the property is either in a very high risk area, it needs constant maintenance, the financing structure is extremely aggressive, the numbers are being calculated unrealistically, and mainly, the investors doing all the work themselves, right? They're calling an agent, they're buying at a super low price point, there's a super low mortgage. So, they're dealing with the contractors, dealing with vacancies, collections. The investor is typically the ones actively managing that, right? It's not passive anymore. So that's buying yourself another job, right? And what we're really looking to do is ask yourself as an investor, what are you actually looking to accomplish? Because if your goal is to squeeze out every possible bit of ROI and get the highest possible yield, then honestly, like turnkey rentals may not be for you. And we're saying that honestly, right? You may want to buy distressed properties yourself. Manage the heavy rehab, burr the property, self-manage it, place tenants, take on more of the operational risk, or build more of an active real estate business. And there's nothing wrong with that by any means, but the higher returns usually come with more risk, more time, more stress, more moving parts. There's just more volatility. Another thing investors need to understand is that a lot of these amazing ROI stories they hear online come from completely different market environment, right? A lot of people compare today's deals to the last, 10 years ago, right? When you're purchasing properties at far lower purchase prices, right? COVID drove prices up, and you're also at interest rates of 3 and 4%, right? It's a very different real estate market, right? If someone bought an asset 10 years ago for $80,000 with a 3% interest rate, of course the cash flow and ROI look incredible today. But that's not the financing environment we're in today, right? Your average rate right now, I mean, I'm recording this today. Your average rate right now on a turnkey rental property is 6+%, 7%, right? So today purchase prices are higher, interest rates are higher, insurance are higher, taxes are higher. So the cash flows are naturally going to be tighter across the entire industry. So sometimes investors unknowingly create unrealistic expectations by comparing today's deals to yesterday's market conditions, right? Turnkey is designed differently, right? True turnkey rentals, the goal is usually stability, durability, long-term wealth creation. Like a realistic expectation on a turnkey investment property is 8 to 10% cash on cash return, guys. We're talking like an index funds. That's not including total ROI, right? But you're getting a professionally managed property, the tenant's already placed, the property is going to be renovated for you if not already renovated. We're looking at long-term financing, lower stress, lower volatility. And honestly, that's a strong return for a relatively passive asset backed by real estate, right? I think the part that a lot of investors miss is this today, like, cash flow today is one piece of the return. Your rent increases over time, your loan balance gets paid down by the tenant, the property can appreciate, your cash flow can grow substantially, right, over the years. So yeah, maybe you start out at 8% and $200 a month in cash flow today, but in 5 or 10 years, right, that same property is then producing you $400 to $700 a month in income. So you buy 10 of those widgets and you hold them for 10 years. Now you're making a nice, almost like an annuity type return in 10 years, right? So, including paying down the principal of the property, the value increases significantly. That's where the wealth is built long term. If you're a retiree and you're an investor, it's like, I need only real estate to pay for my, retirement. You might be in the game a little bit too late unless you've got $1 million to invest, right? If you're 55, 60 years old and you're like, well, I want to buy 30 of these things and I'll have them all cash flow $500 a month, that's going to take a lot of capital. To make 10% in the market, to make 8% in the market on index funds and things like that, people are like, oh my gosh, it's only $300 a month. Go chat GPT or Google how much you need to invest a medium risk stock portfolio or index fund to make $300 a month. You'd be surprised, right? So I digress here, guys, right? The whole point is here is, if investors are usually, going to lose in real estate are the ones that constantly are chasing highest ROI instead of focusing on, the quality of the asset, right? We want to focus on the quality of the asset. We want to focus on, a stable long-term market. Because sustainable wealth in real estate is usually boring at first, but boring done over 10 or 20 years creates financial freedom, right? So instead of asking what's the absolute highest ROI I can find, a better question is what portfolio can I actually hold long term, sleep well at night, and scale consistently? Like that's typically where turnkey rentals shine, right? That's what we're here for.